And kind of off where we left off, we were looking at the bull flag. So I've mapped one out here, massive one on the daily time frame. So current bull run we're in, kind of just go through. I think I've got 6 patterns I want to run through. So bull flag, how to trade it, what it is. Obviously, it's in the name. It's a bullish pattern, continuation on. Out of a low, generally on a macro time frame, you want to be looking for this flagpole, and then you're going to see a downward price action, like a descending channel of some kind, where the low or the highs continue to get lower, and the lows also continue to get lower. So we're putting in lower high, lower low, lower high, lower low, lower high, lower low. It's quite common for you to have 3 drives down. You can see we have this one drive, 2 drive, 3rd capitulation drive down, and then we started to grind out of the flag. Now, trading this, it's best to wait for the breakout and get in on a retest. So if we zoom in a little bit and look at exactly what went on here, they don't always work out. None of these patterns are 100% win rate. But in this case, the timing of this had a lot of people scared. So if we think back to what was happening here, we had this push up basically to an equal high from the ETF March high. So we came up to hit that first, and this was before the election. Then coming into the election, everybody in crypto was bullish for Trump, but the polls were starting to show Kamala was actually becoming the favorite on this run up on the week before. Poly markets and stuff was influencing that. But what it actually ended up resulting in was a perfect overside retest. The day of the election, then we got the pump. So a lot of people did not want to actually enter this kind of trade, even though this is a strategy, this play in the bull flag, play in the retest. With the macro picture, people were hesitant to enter. But you've probably heard this before, that oftentimes it's all in the charts, and it was in the charts here. But we were waiting on the news. So your ideal entry is to not chase price as it breaks out, but instead wait for a retest, which you did get. Placing your stop loss, that is more independent to you, your trading strategy, your risk tolerance, depending on what size you're entering this trade with, but how much you personally are willing to sit in a drawdown. But a good rule of thumb is if you take the high and the low of the bull flag. So our bull flag low was here around the 49 mark, and our high was the ETF all-time high at the time, 73.9 or 73.8. And using your fib, or you can use a GAN box, which is the same thing. 50% level tends to be a good spot to place your stop loss outside of. You could almost say that this bull flag becomes invalid if price was to come back down under this 50% level. So you can see here in the one I've drawn out, I've got my my stop loss at the 50%. But what you could also do, looking at this chart, is we've had this breakout. We're putting in this low right here, and this is where we're going to enter. What you might want to do, if you can tolerate it, is have your stop loss outside of this key previous low. So at this point, we've put in our low capitulation event. We've put in a high, put in a higher low, higher high, higher low. So this last higher low might be an area where you want to take it, or you can, again, just go outside the 50%. But I'm sure if you're a trader, you all know about, the golden pocket. And that golden pocket pretty much lines up perfectly. So you could also go at the 618, which would have you outside of this. But when trading, obviously the wider the stop, the less risk reward. So the tighter you can tick your stop, the better. And then profit target for a bull flag is going to be, everybody takes, some people take it off the actual breakout. I take it off the low of the bull flag. So if we take this whole flagpole and we place the flagpole off the low of the bull flag, it would have had us having a profit target of 107.7 roughly. With a stop loss at the 50% level, you're looking at a 7R. So if you risked, it's a swing trade, so you do want to risk more. So if you normally are day trading risking 1%, you could risk 5 to 6% on this. So if you're risking $1,000 at this stop loss, then you would be, and you read it the whole way, you'd be up about $7,000 on that trade. Any questions on the bull flag before we move on? If not, I'll just keep rolling. Okay, so we'll get rid of the bull flag. Bear flag next. Same idea, opposite direction. So again, these two patterns are continuation patterns. So you're not gonna be playing a bull flag out of a low. So like right now where Bitcoin, is at a low, you're not going to have a bull flag really here at the low. You could have a bear flag. We could have a bearish flag. So that's what we've seen here. Last cycle, we had this M formation, which we're going to run through as well. You can trade that. And then we had this sharp move down, slow grind out of that low, and this created a bear flag. So it's a channel basically, and you can trade the channel as well. There's nothing wrong with playing the range. But the bear flag, what you're waiting for is a break again and a retest. So all the same rules go, but in the opposite. So here wasn't quite as clean of a break of the support. But one thing I would say is what you really want to see when you're looking for a break of support in a bull flag or a bear flag is you do want to see a sharp drop down, like with heavy momentum. So like the likes of this candle right here, you want to, it will give you more confidence if you see a break of the support with more momentum. So what I would say is, just the way that I've drawn this, that's where my support is. But this candle right here, if we look at it, this candle is what I'm looking for. So that's, we did break it. We had kind of a weak break of support. We came up, we did retest it, and then we seen large momentum rejection off the support. So we came up, tested the support as resistance, and then got a heavy rejection. So now I would be looking to take my entry on another retest of my support. So right there, you could have entered. You don't want to miss the entry either. You don't want to be super strict. You could, gradually work into this position. You could take entry a little bit lower with a DCA, two DCAs, a DCA on the support or now resistance, and a little DCA, inside that level. What I've done here is taken the swing high, the last swing high to the last swing low. And ideal stop loss 50% above the 50%. So the 50% is here. I'm going to go a little bit above. I'm also looking at this little supply area here. So if I was to draw a box, we've already gone through supply and demand, but this little hesitation, right here, I want to have my stop loss above that candle. So we put it there just to be safe. Target, again, doesn't always play out, but we're looking at this flagpole. I've taken the the daily or the close price basically to the close price right here, duplicated the pole, and it's down here as my target. This is where my final TP would be set. Into that later, but so this what I technically look for in a bull flag and a bear flag to be very clean is this like an ascending or a descending channel. That's ideal. Okay. What we have right now on the lower time, and also worth pointing out, you can see the two bull flag and bear flags that I've highlighted. They're both on the chart here. This is on the daily time frame. So these are very much macro. This is a macro bear flag from the all-time high down to the low. And this is a macro bull flag from the low to the high. So if we look at this, like our target almost got hit. So that's a huge swing trade. You're ticking like this is a year for this. You're holding this trade. Same thing here. This is 3 months. So these are going to be more accurate than looking on the lower time frame. I would say 4 hours still accurate, 1 hour is accurate. But when you're looking at these patterns on a 15 minutes time frame, they're not as reliable.